Brilliant. Hi guys, welcome to the pre-market overview, Tuesday, September the 8th. Happy Labor Day to you guys in the States. I forgot to say that yesterday, but I hope you guys had a good holiday and a good weekend, or good long weekend. So markets are back in action. We did obviously have some markets open yesterday, but all of the markets now back in action again. So effectively, this is kind of like the start of the week. So welcome. So for those that might not know, my name is Becky. You can see my email address there, becky@tradewithufos.com. There's also support@tradewithufos.com for the support team. Those guys are normally quicker at responses. So you can email me, of course you can. But if you have any questions about anything we cover, you can email either one of us, me or support@tradewithufos.com. So for those that may have never joined us before, this might be your first time on the pre-market overview. What is it? What do we do? Well, basically what we do is we go through our newsletter. So our newsletter is a document that's sent out every day, Monday to Friday. And in that newsletter, we go through 4 of the major markets in the world. We talk about where we think they're going to go, how long we think they're going to go there for, where price might turn and change direction, where we have volatility or what the volatility is that we expect, as well as news. So quite a lot is gone through in a 2-page document. So we do this pre-market overview to just expand on those concepts a little bit more, and explain the technology that we've used and how we've come to those conclusions, for those that might need a little bit more background to it. So if you want to subscribe to get the newsletter every day and have that document for yourself, you can email us at newsletter@tradewithufos.com and we will put you on that. So just a reminder from those joining us from within Tradewith, hi again, by the way. Today is Tuesday, so you have stocks and then investing in terms of your sessions today. We normally have futures and options on Mondays, Wednesdays and Fridays, and sharpening sessions over the weekend, which are psychology sessions as well as methodology reinforcement and things like that. In terms of upcoming courses, for those that are within the channel or not that might want to learn something from the foundations up, the next class we have is back testing. That's September 19th and 20th. Then we have futures, stocks, psychology, and trading plans. Those are the 5 courses that we do. If you go to the website, www.youcantrade.com/Tradewith, you'll be able to learn a bit more about what we do and what's included in these classes. Okay, so I'm just going to put the disclaimer on the board here because it's something we need to go through. Not just legalities, obviously, it's important for you guys to read this and for you to understand the risks involved in trading and things like that. That, in a nutshell, is what this disclaimer covers. Is that, of course, there is a risk in trading. You need to be aware of that. You need to be willing to take that for yourself. Of course, we're here to help, but everything that we show is educational content, ideas, demonstrations. It's meant to show you how we use the technology, more so than being trading tips or trading advice. If you want to learn more about it, if you go to www.youcantrade.com and you'll get additional disclosure information on there. Tripping over my words a bit today. Another quick reminder, we do have an app on the App Store. The You Can Trade app is available on the App Store. For the moment, it's not on Android. It's not on the Google Store. But for those that have iPhones, iPads, or whatever, you can join us mobilely from the App Store there. Okay, so now that we've done all of that, let's crack on and go through the newsletter. So I have on the right-hand side here, this is the newsletter that we send out every day. And like I said, you'll see we go through 4 of the major markets in the world. Sorry, let's just do here. Where are we? I'm losing everything. Okay, there we are. Brilliant. So we have the S&P, which is obviously one of the major equity indexes in the world. We have oil and gold, major commodities, and the euro as well. The euro, we look at the euro versus the US dollar. So it's the spot forex currency pair. That's actually the highest traded currency pair in the world. So lots of volume moves through all of these markets, not just the last one, but between all of them, that's a lot of volume, lot of orders move through it. So even if you don't trade those markets directly, I'm sure a lot of what you trade will be correlated at least or affected by these markets. We're also going to look at a daily chart for each of these markets. Now, of course, different things happen on different timeframes. So if you trade much higher timeframes or much smaller timeframes, of course, things will be different. But the daily chart is something that's quite commonly used and it's used by a lot of people. And so hence why we use the daily. Now for each market, what we're going to do is we're going to come through the climate, which means basically what direction do we expect the markets to be going in? What's the trend? What's the market environment? But more importantly, what are the probabilities associated with that? I'll show you that in a minute on the chart there. We then have propagating, which is understanding if we're moving in an upwards climate or if we're moving in a downwards climate, how long can we expect that movement to keep happening? So on the right-hand side, these figures here tell us what normally happens in these markets, how long these markets normally go up or down for, depending on which one we're in. And then we see on the left-hand side is where are we relative to that normal movement. So it gives us the probabilities as to whether or not we can expect the movement to continue or whether or not we're more likely to be coming to the end of that. We might be seeing the trend change direction. So we use the Auto Climate app that's shown here at the bottom of the chart there with these little dots and lines. That's our Auto Climate app. We use that to give us this information, the climate, the probabilities associated, and the propagating figures too. What we're also going to look at is nearest UFOs. UFO stands for unfilled orders. Although they might look like flying saucers, and yes, that's how we depict them on a chart. You'll see them there. They do stand for unfilled orders, not identified flying object. And what that means is where we expect there to be big stacks of buy orders in a market that can push it upwards, or big stacks of sell orders in a market that could push it downwards. Where do we expect these orders to be? So we use the Auto UFO app to analyze market data for us and show us where these orders are likely to be on a chart. If they're buy orders, it shows to us as green UFOs, like we see here. If they're sell orders, it shows as red UFOs. I'll show you that in a minute. So we're using technology here to give us probabilities based on the direction of price and where we might see it turn. Then what we want to understand is volatility, meaning how far can we expect these markets to move within given periods of time. So we look at current implied volatility, and you'll see that these numbers are all percentages. So these numbers represent the expected movement up or down in 1 year as a percentage of its current value. So it's an annualized number and it represents a percentage of whatever the price is now. We can then reverse engineer that and understand what that means in terms of movement up or down that can be expected in 1 day, movement up or down expected in 1 week, or movement up or down expected within 1 month. So the volatility gives us an idea of movement up or down in terms of the amount of points or the amount of pips that we expect it to move up or down within these periods of time. The climate and the propagating and the nearest UFOs give us an idea of in which direction we're likely to see that happen and for how long and when it might turn. So we'll go through each of these individually per market, and then we'll come down and look at upcoming news. So we're going to start with the S&P. That's why I've got this here on the left-hand side, the S&P chart. So we see here with the S&P that we have a thick red dot here on the bottom for our auto climate. Now, those of us that joined me yesterday, you'll notice that everything is pretty much the same as it was yesterday, because obviously most markets were closed yesterday, or if they were open, had very little volume. So a lot of it is the same. So here, thick red dot, that tells us we're on a confirmed downwards climate. So the auto climate app can show us one of three things. It can show us a thick blue dot. That would tell us we're in a confirmed upwards climate, meaning that we have market move to the upside, market trend is upwards, and that we have probabilities to the upside. It can show us a thick red dot, like in this case, which tells us that we have a confirmed downwards climate. Market is moving to the downside, trend is to the downside, and we have probabilities to the downside. Or it can show us a thin dot of either color. The color still telling us that it's either up or down, but the fact that it's a thin dot, that's the Auto Climate app's way of telling us that there are less probabilities. We lack statistical advantage in that direction, meaning on most of the days like that, we choose to do nothing. Here at Tradictive, it's all about using technology, probabilities, and statistics. If we don't have probabilities on our side for a trade, we don't take it. So in this case, thick red dot, confirmed downwards climate, probabilities there to the downside. No sell orders above us. We don't have any red UFOs, which is why this is blank. Closest buy UFO is this one here. I'm just going to move price a bit so I can see it better. There we go. So the numbers for that are 3294.61 to 3284.53. So closest stack of buy orders there as highlighted to us by our green UFO. Now we saw that the auto climate was down, a confirmed downwards climate. Now, normally, the S&P would go down for 4 candles on a daily chart, so 4 days. By the way, all of those numbers on the right-hand side, I'm going to round it up. Whatever the decimal place is, I'm going to round it up. So 4 candles it normally goes down for, and we're on candle number 1, meaning we have probabilities of a continuous move to the downside based on what normally happens and where we're at now. So again, confirmed probabilities to the downside with our climate. The propagating has probabilities for a continuous move to the downside. Now, we don't have any sell orders above us, but it would look like for the time being, probabilities there are to the downside. Now, in terms of volatility, we see that in a year, we would expect movement up or down of 30.75% on the S&P, which means in a day, we would expect a movement up or down of 0.66 points. In a week, up or down of 1.46 points. And in a month, up or down of 3.04 points. So that's a movement that we expect on the S&P. Right, next market. Next one is oil. So we're going to look at CL. That's the continuous futures contract there for oil. Just going to squidge that a little bit so we can see it. There we go. So once again, we see a thick red dot on the bottom here. That tells us we have a confirmed downwards climate, probabilities to the downside. Closest stack of sell orders is here, 41.37 to 41.87. And closest stack of buy orders is here, 26.31 to 25.80. And of course, we can see it's just nestled on top of another one there as well. So for oil, we see that normally it would go down for 7 candles. Again, just rounded that up. And we're on candle number 5. So we still have probability of a continuous move to the downside, at least for another couple of days. We also have sell orders, newly formed sell orders just above us. So again, probabilities there to the downside with oil. Now, when it comes to volatility with oil, we see that we would expect a movement up or down in 1 year of 44.02%. That means in a day, we expect a movement up or down of 1.06 points. In a week, up or down of 2.34 points. And in a month, up or down of 4.88 points. So that's oil. Let's move on to the next one, which is gold at GC, continuous futures contract once again. Okay, there we go. So once again, thick red dot, confirmed downwards climate, probabilities to the downside. Closest stack of sell orders just there, 1973.7 to 2001.2. Closest stack of buy orders just here, 1836.7 to 1825.9. Now, normally gold goes down for 3 days, so 3 candles on a daily chart, and we're on candle number 3. So we're starting to come to the end, or we have come to the end of what is a usual move to the downside on gold. So again, just bear in mind, we lack probabilities for a continuous movement down, although the climate is obviously telling us that we have a confirmed downwards climate, and we do have sell orders closer just above us there. So still more to the side of the sell orders, more to the side of selling pressure. But again, bear in mind, we're lacking probabilities there for a continuous move down. So just be careful with that. Okay, so when it comes to gold, we see that we would expect a movement up or down in 1 year of 21.98%. That means in a day, up or down of 26.6 points. In a week, up or down of 58.5 points. And in a month, up or down of 121.7 points. Okay, so last market, let's look at the euro US dollar. That's the spot forex currency pair, euro versus the US dollar there. Again, I'm just going to move it a little bit so we can see what we need to see. Let's maybe scrunch price a bit. There we go. Okay, so you see with this one, this is the first one that's showing us a different climate. That is a thin red dot. So the fact that it's red, it's still a downwards climate, but it's thin. That means less probabilities, less statistical advantage. So again, for us, we only do things when we have probabilities on our side. Now, of course, just because things are probable doesn't mean that they're definite. So just because in prior examples we have more probabilities to the downside doesn't mean that we're just going to go short and not manage our risk. So we do still need to run our analysis properly, manage our risk properly as well. But in cases like this, when it's an unconfirmed climate, less probabilities, there's no point doing anything. We choose to keep away. Now, we show you on the newsletter that it's unconfirmed. So you'll see there's a downwards pointing red arrow, and it's got a little cross next to it. That little cross is our way of telling you, or the newsletter's way of telling you, that it's unconfirmed, lack of probabilities. Now, in terms of orders, we have sell orders just above us there at 1.1901 to 1.2012. I've just rounded that where it needs to be. Closest stack of buy orders is here, 1.1597 to 1.1507. Again, just rounded that where it needs to be. Now you'll notice that we have loads and loads of buy orders beneath us, many stacks of buy orders, one after the other. I think there's 8 or 9 there just in a row. So we have an unconfirmed climate, which is kind of not really telling us much. We have sell orders above us, yes, but we have many buy orders below us. So at the moment, there's just no real push either side. So again, we choose to do nothing really on markets like this, days like this. Now, in terms of normally what happens, the market would go down, or the euro US dollar would go down for 4 candles, and we're on candle number 4. So again, probabilities that the climate might change, but it's an unconfirmed climate, loads of buy orders, sell orders just above, loads of mixed signals there. So again, keep away would be what I would say. So for the euro, we expect a movement up or down in 1 year of 7.67%. which means in a day, a movement up or down of 57 pips. In a week, up or down of 125 pips. And in a month, up or down of 261 pips. So again, the volatility just tells us how far we can expect price to move within given periods of time. The climate and the propagating the nearest UFOs let us know in which direction, for how long, and where price might turn there. So that's everything in terms of direct forces for today. What I mean by that is that the most direct force we have that can move price up or down are buy orders and sell orders. That's it. That's all we have. Now, of course, there can be other reasons there can be other reasons as to why there are buy and sell orders, which is why we need to understand indirect forces as well. So for us, what we look at, I'll just make this big here. Okay, for us, what we're looking at, we are looking at reports or news that's scheduled to come out that could impact the amount of orders in a market, whether to cancel them or to add more, potentially add volatility. So we need to be aware of that. And we go to fxstreet.com/economic-calendar. Now, we use that and we filter by high impact news and by US markets. So, of course, if you trade outside of that, you can change the filters on that link and look at what fits your trade plan a bit better. Now, again, this week, there was nothing coming up till Friday. Friday is the first day that we have any high impact news that's scheduled to come out. That's not to say unexpected things don't happen, obviously, in the week leading up to it. But in terms of scheduled reporting, the next one is not till Friday. So we might see a lack of volatility in the meantime whilst we wait for that news. By the way, when the news comes out, you'll see it will populate in the actual column. You'll see data in here. It will fill in. At the moment, it's empty because it hasn't come out yet. And on the left-hand side is the time of day that it's scheduled to come out in Eastern Standard Time. Okay, so that's everything for today. So just a couple of reminders then. For those that are joining us from within Tradictive, today is Tuesday, so you have stocks at 9 a.m. and investing at 1 p.m. Eastern in terms of those sessions that are on today. If you are joining us from outside of Tradictive and you want to join us and join the fun and join the sessions that we do, whether that be futures, options, stocks, investing, sharpening, psychology, all of the sessions that we do, if you want to attend them, you can join us at tradictive.com/youcantrade. Now, I get it can be a bit hard to figure out which educator is going to be best for you, which way of trading makes the most sense to you. I know there's many out there to choose from. So you can have 14 days, so 2 weeks, free access to us so that you can try us out first. See if it makes sense. If it doesn't, no problem, you cancel the subscription. But if it does, you've had a couple of weeks to really know that works for you. In terms of classes, next upcoming one, backtesting class, where we teach you to take a strategy and then test it into the past so you can see whether or not it would have worked up until now to save you time testing it in the future. So the link for that is tradictive.com/backtesting live. And at the moment, thanks to You Can Trade, you can register for any course and get an additional course for free. So have a look on the website at the courses we do and how you can put that together. If you have questions about anything, not just courses or subscription or anything like that, about anything I've covered, about trading questions in general, we're all happy to help. So you can email us at support@tradictive.com if you need anything. Otherwise, we'll see you in the sessions later on today, and I will be back tomorrow morning for the next pre-market overview. So have a good day. Hope the markets treat you well. Have a good one, and I will see you tomorrow. Take care. Bye-bye.